All right, good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy, it was a Wednesday, right? Happy Wednesday. And hopefully, you guys are ready for what should hopefully be a successful and profitable trading day. Yesterday was awesome, right? We took advantage of the market, we caught our nice move, we controlled the variables we could control, and we bounced back from making a little bit of a mistake, right? So for me, that kind of reinforces just how important that actual risk management is, right? If we ignore our plan, if we try to overthink our thesis, if we try to listen to every what if or whatever, right, is out there, then we put ourselves in situations where we're not actually trading our system. I try to stress this on a day-to-day basis, but I'm trading my way, right? I'm trading my technique. I'm trading my strategy. And everything else is irrelevant, right? It doesn't matter what MACD tells me. It doesn't matter if we're at some fib line. It doesn't matter if we're oversold or undersold on some indicator. All of those bits of information are irrelevant to how I trade on a day-to-day basis. Now, that doesn't mean that those couldn't create a profitable strategy, or that you might have an edge, right? Trading those ideas, you absolutely could. But myself, right, that isn't my edge. So pretending that it is, or then overreacting to those bits of information or doing anything along those lines, right, ultimately gets me away from trading my edge to trading just some random data sensory overload. And that's not how I make money, right? We talk about every day about controlling the variables you can control. And the most important variable that you can't control is making a plan, trusting your plan, and trading your plan. And yesterday was an excellent example of that, right? We're able to get excellent follow through, able to take advantage of a fantastic bounce play. And we put ourselves in situations where we traded our plan, we trusted our plan, and we profited from our plan. So that for me, right, is priority number one on a day-to-day basis. All the outside noise, all the tricks and the traps and the fears, right, that we have trading are going to be exaggerated if we start looking for excuses to not trust our technique. And the more and more we deviate away from those ideas, and the more and more that we basically set ourselves up, right, to trade our impulses or to look for confirmation bias, then the harder it is for us to trust and trade our plan long term. I've said this before, but the hardest thing that you can do as a trader is basically commit to that 20 to 30 days of resetting your habits and go from trading your impulses and your emotions to trading your system. And that fight that you have to go through to kind of overcome some of those demons is the hardest thing you'll ever do. Once you commit to that process and you get through that learning curve, not to say that the market's ever going to be easy, but learning how to trust yourself then becomes a very addictive process, because you start to see tremendous results from you believing in yourself. And I think ultimately trading is not me versus you. It's not me versus Powell. It's not me versus George Soros. It's not me versus the market. It's me versus me. And so I need to trust in my own ability. I need to trust in my own technique. And I need to trust in myself more than I trust some indicator, more than I trust some random comment on social media, more than I trust some headline on CNBC. All those things are irrelevant if I don't learn how to trust and believe in myself as a trader. Now, I try to show you guys that as transparently as I possibly can on a day-to-day basis. It's not always pretty. It's not always easy, right? It's not always, flashy by any means, right? We all have negative self-talk. We all feel like we're idiots sometimes. We all feel as if the result that we want is not in our grasp immediately. But that's just our brain trying to trick us into doing what is easy, not what is profitable, right? If being profitable was easy, then everyone would trade the same strategy. Everyone would trade the same technique. Everyone would, have the same mentor or same coach or join the same service because it was easy. So if you want to become a profitable trader, you have to find the setups that show you the path of least resistance. And in your mind, you have to overcome the path of most resistance. So it's kind of like a little bit of a divergence there, right? And the more and more we can practice those techniques and get good at trusting ourselves, easier it is for us to achieve the objectives that we actually want from the market. So today, right? 24-hour rule in effect, not bringing yesterday's win right into today's market. Yesterday was a fantastic day, but that doesn't mean that today I should be willing to gamble or be looser or be, I think those are the right terms. Like, I shouldn't be willing to basically now ignore my process and ignore my rules because I have a little bit of P&L supporting me here on the week, right? That for me yesterday is evidence to be even more stubborn here today, right? To not allow myself to feel like my shit don't stink, right? To not allow my ego to take over and trade setups that aren't there. So today, like always, it's about obsessing over the variables I can control and understanding that when I follow my technique and follow my system, I make a lot of money. When I ignore those ideas or think this time is different or look for exceptions to the rule, all I do is put myself in situations where it's challenging to be consistently profitable. P&L variance is real, right? It doesn't always show up when you want or where you want, but we're not playing for a day-to-day P&L. We're playing for a week-to-week, a month-to-month, a year-to-year outcome. And so we need to behave in that way so that we can survive our variance too. So I promise you it's not personal. The market doesn't care. The market's not always going to give you a monster. It's not always going to punish you relentlessly. And the challenge that we have to do as traders is to remain consistent and to trust ourselves above everything else. So with that being said here, team, I'm looking forward to what should hopefully be another exciting and hopefully profitable trading day. And let's absolutely get after it. So good morning, Suresh, Tanja, Juan, Bravo, Devin, Ruben, Tasha, Jeff, Nate. Ruben, congratulations on passing your eval yesterday, man. Well done. Nate, Craig, Daniel, SG, Mike, Michael, Salstein, Greg, Dustin, Brian, Igor, Emil, Emmanuel, Topher, Steven, Chad, Constantine, John, Jeremy, Rod, Bugs, Samuel, Elite, Sabrine, and Reem. Hope you guys are all having yourselves, hey Maria, I hope you're having yourselves a fantastic day and are ready to absolutely crush today's session. So first things first, economic calendar, right? We got new home sales here at 10, and we got some Fed speak once markets close, fine. So we're nothing too crazy, and then just double check Forex Factory here. We got crude oil inventories at 10:30. So that'll be worth keeping an eye on. Maybe avoid crude until that session, right? And maybe just know that we're going to get a little bit of algo opportunities. Good morning, Ben. So yeah, let's have ourselves a great day here, team. And let's start mapping things out. So first things first, what's the count on ES? Let's start there. Yeah, 2 out of 3 to the upside with volume spot on. And so what does that mean for us? And how do we feel about yesterday's volume? Big, not so big? How do we feel? Yeah, it's well below average, right? Good morning, Dwayne. So not exactly a mega volume standard, right? So in theory, it would be relatively easy for us to get bigger volume than that here to the downside, right? It certainly wouldn't be too surprising. But markets continue to basically coil and look like they want to break out through all-time highs, and we just haven't had that move here yet. So it wouldn't be surprising to get a fake out and rejection, and it wouldn't be surprising for us to get a breakout through that 5,800 to really start pushing things. So in theory, I'm going to have a little bit of flexibility here in either direction this morning. But I'm going to need more volume to the downside than yesterday, and I don't need to apply that same strict standard here to the upside. Does that make sense? All right, perfect. And then not too much is changing levels-wise, right? Because we haven't really gotten that breakout. So 5,800 still going to be our first target, and then we've got space, 10 points along the way past all-time highs. All right, NQ, how do we feel? Better volume, worse volume than ES? What's the deal? Yeah, better volume than ES, right? Not nearly as light as it was. We talked about yesterday about ES, right? Lightest volume in about a month. NQ, not quite that same narrative. So I'm not going to have a downside case here, right? So it's a classic 2 out of 3 to the upside with volume. And we're still looking for just that trend breakout here towards 2030 or 2300, I should say, right? Not too much is going to be changing within that context. Looks fine. Yesterday's close, we didn't close above that 2200 area, which would have been, an ideal sign of strength. But let's see if this thing can give us an oomph. All right, crude. So today, right, we have a news narrative on it. And what's the count? So what's the count here? Red candle, green candle, decreasing volume, gap down, right? Means it's a 1 out of 3 here to the upside. So weak trending price action, right? So we'll be looking for a move towards 72.50 and then like 74.50. So we'll go 71, 71.50, 72, 72.50. Good morning, Brian. And then to the downside, right, we're still in play, targeting 69.50 and then beyond. All right, Apple, what's the count? I don't like these key facts. This is getting annoying. So red candle, decreasing volume, gap down, right? Weak red candle. Wick is larger than the body. If we're going to visualize that candle, right? That arrow is pointing up. So it's a 2 out of 3 here to the downside without volume. And that's kind of opposite, right, to NQ, right? So we're still looking for that 230 breakout, and then to the downside here, we're going to look for a 225.50 breakdown. All right, Tesla. Gapping down 10 cents here. Green candle, increasing volume, baby gap down. So 2 out of 3 here to the upside with volume. That's outlier, right? So we're looking for a 257 breakout, we'll call it. And then no bear case. Okay, Microsoft, what's the count? Maybe starting to flag here a little bit. Something like this, right, would be a possible flag. So we'll say possible bull flag, right? But a 2 out of 3 to the downside with volume. And then, so we're looking for a breakout over 437 or a breakdown here under 426. Well, with volume just means is the volume bar bigger than yesterday, right? So do we have an increasing volume standard relative to previous day? So is yesterday's volume bigger than Monday's volume, right? So in this case, yes, it's increasing. So we're saying it has volume support. All right, Amazon, red candle, increasing outlier volume, right? And then a 2-cent gap down. So this is a weak 3 out of 3. But we know that a lot of that volume there yesterday, right, was dip buyers protecting that range. Still a higher high and a lower low, which creates some kind of indecision, right? Because if bears were strong, right, why couldn't they hold lower lows? If bulls were strong on that dip buy, why couldn't they recover and finish green? Now it's a 1-cent gap down, so not exactly significant. But we maybe are starting to get a little bit of resistance towards that 200 barrier. So we're looking for a 195.50 breakout, right? Or a breakdown here still under 190. We start every day at about 9 Eastern here. And then obviously the market opens at 9:30, and that's when we start looking for live trades. All right, AMD. Green candle, increasing volume. Again, a 1-cent gap down. So we'll call this a 2 out of 3 here to the upside with volume. It reminds me a little bit of ES though, right? Good volume, but not great volume. So we could easily invalidate this, but we'd still like to see that 160 breakout. That didn't happen there yesterday. And then to the downside here, probably go NA. Okay, NVIDIA, possible bull flag breakout here, right? Good breakout on volume, holding above those previous highs. Now gapping up nicely as well, right? About $1 gap up. So this is a classic 3 out of 3. Hey, Jen, it's raining for me here too, so you're not the only one. But 3 for 3 here to the upside, and we're looking for a 122 breakout. Or, right, a retest of the flag. And then no bear case. Good morning, Robin. All right, Meta. Small little gap down, right? But, again, reminds me a little bit of, was it Amazon, right? Where it's a red candle, but we know a lot of that volume is going to be dip buyers. We can call this a weak 3 for 3 here to the upside. Sorry, to the downside. And we're still going to be looking for a breakout over 574. That hasn't changed. If we're going to stack up both of these Monday and Tuesday together, it kind of just looks like indecision, right? A little fake out higher, a little fake out lower, and now we're you know, in the implied quote unquote middle of that range. So we'd like to see a breakout above that area or a breakdown under that area. Hey, Luke, how you doing? So not too much for us to do here. Sorry, 554. Okay, Netflix, green candle, increasing outlier volume, right? And then a little baby gap down as well. So it's a 2 out of 3 here to the upside with volume. And so we're looking for a continuation narrative above yesterday's high, which is all-time highs, right? So that's got to be 723. And then no bear case here today. On Netflix, well, the yesterday's close, right, was 722.26. Today's implied open, the pre-price, right, 721.45. So it's gapping down, you know, 75 cents approximately. All right, Google. Red candle, decreasing volume, gap down, right? Same story as like Amazon and Meta, right? Where it's a weak candle shape to the downside. So we'll call this a weak 2 out of 3 here without volume. And so we want to see, again, right, a breakout over that 166 that has not changed. Or, right, probably a breakdown here now under 160. Cool. And then VIX hanging out at 15.59. So not a lot of fear in the markets here at the moment. So let's see, right, if this thing wants to give us some enthusiasm and give us a bit of a, like if bears are going to step up, right, and really break down, we should see VIX increasing. If it's going to be a bull day, we should see it probably decreasing here a little bit. So let's see if this thing can really run for us, right, and kind of create the consistent narrative across the board. So generally, right, indexes are looking a little bit stronger than our leading names, and we'd like to see these narratives sync up here this morning prior to us being aggressive. What we've seen as a general theme here so far this week is kind of like a divergent element or divergent story between our leading names. So we'll see like one strong name, one weak name, one strong name, one weak name. And so that just creates, right, that choppy price action that makes it hard for us to get that trend day. So the more consistent that the narratives become here across the board, easier it is for us to really take advantage of that momentum and hopefully put ourselves in situations where it's easy to be green. Any questions here, team? Any questions? All right, so we got about 6 minutes here till market open. So I'm going to go make myself a quick cup of coffee, spend a few minutes here visualizing a successful trading day. And then, yeah, we'll jump back on and do a quick little rundown as the session starts. Be back in a few minutes here, team, and we'll get after it then. All right, everybody. So that's market open here. Let's see how the day shapes up, right? And where that enthusiasm comes together. Again, we do have a little bit of flexibility in either direction, but a more bullish than bearish bias, right? So let's see how that kind of comes together here this AM. So far, relatively good enthusiasm on ES, right? Going to be making that first attempt to test 5,800. And already, right, the bigger range than what we saw there yesterday. So that's optimistic. And Q looking fine as well. So let's see where that momentum shows up here and if it shows up early. Good morning, Herschel. Okay, so good volume at the open, right? 8.6 versus yesterday's 8 on NQ. 26.7 versus yesterday's 20.1 or 20.9, sorry, almost 21. Everyone feeling good this morning? Good. Let's see if the market wants to cooperate here for us. So a few words of advice before we get any trades. Ruben, I'm thinking about you here a little bit, right? So it's your first day with your live account, or it's your first day starting an eval, or it's anything along those lines. Work your way into it, right? I'm kind of a believer here that very often, after I've taken a payout or I've hit a financial objective, or, you pass your evaluation or something along those lines, the thrill or the kind of like satisfaction you get from passing or from, taking that first step, not to say it makes you skip steps, but it often makes it easy for you to ignore your rules and to feel like, hey, today's going to be the first day of the rest of my life, right? Type thing. And that excitement often allows you to start to skip details or to skip little processes or, to basically maybe ignore some of your rules. So, if it's your first day after a payout, it's your first day with your live account, it's your first day starting your evaluation, my recommendation is to size down and to basically remind yourself that, hey, the P&L is a little bit irrelevant until, right, I reinforce those habits. So almost like fight back against some of that, anxiety or that fear or that greed by sizing down your trading here for the first day, for the first couple days, for whatever standard we want to call it. And then from there, right, once you have that buffer, you can build back up, right, towards being a little bit more aggressive. So for me, right, we're trying to not feel rich after one day. We're trying to feel rich after a month, after 6 months, right, after a year. So forcing yourself to slow down that process intraday can often be a really good way to make sure that you don't start off on the wrong foot. And if for whatever reason, right, you get slapped in the face, it should be a much slower process. How did that happen, Dwayne? Yesterday was a great day, right? So I don't understand how that happened. One trade, right, that was a $90 loss, and then one trade that was like a $7,000 win. Yeah, can be, Ben, absolutely. I can't remember what it was like to pass my driving test here now. That feels like a lifetime ago. Don't like to hear that, Dwayne. Right? We can't make it personal. You made it personal and you cost yourself. Can't do that, right? Market doesn't care. It's not going after your feelings. We have to trade our system, not trade how we feel about the price action. How we feel about the price action is a lie. And so we can't self-sabotage ourselves that way and cost ourselves progress. I've said this many times, right? But it's the best loser that wins. So if we can't accept losing small, then we're never going to be able to win big. And so if you're in that situation, right, the move for yourself has to be to make it easy for yourself to lose small, right? So why couldn't you accept that loss? Well, you probably didn't have a stop loss set protecting your entry price, right? And then once you see P&L go from green to red, you get stuck in that hopium thinking, hey, it's going to go green forever. oh, I'll get back to it, I'll recover, and you no longer think rationally within your system. You start thinking purely in P&L terms. So when you get to that fork in the road, right, you have to make it easy for yourself to be green. The only way that that's easy is by putting yourself fail safes, right, so that you don't have to rely on your feelings. You can just get stopped out, right, take the small win, take the small loss, whatever it might be, and then reset and protect your mental capital. But that is completely unacceptable, and truth be told, you should know better by now. Right? Don't ever overestimate your ability to do the right thing when you have no fail safe if you're wrong, right? So far, no setups here across the board. Not going to play crude till after 10:30, right? It's got that data. Pretty much, right, everyone, the trader who can avoid their most aggressive forms of self-sabotage is the one that wins. So we have to be very honest with ourselves and identify, okay, what am I bad at? Well, most of us are bad at accepting losers. So if we don't set ourselves up to be able to accept that easily, then all we're going to keep doing is reinforcing our bad habits and make ourselves feel like shit, right? Can't do that. Interesting. Now I was trying to get some moves here to the downside. ES I could trade lower, NQ I could not, right? We got quite a bit of work to do here. Because the volume is much more impressive, right? So it's a 2 out of 3 here to the upside with volume. It's not like the lowest volume we've seen in a month. So it's a lot more challenging for us to overcome that standard. Historically, when we have 2 out of 3 conditions to the upside with volume, that means that we're looking for bullish continuation, right? Not bearish breakdowns. On ES, we have a little bit of an exception in play here today because the volume that we've seen so far this week on ES is like the lowest we've seen in a month. So it would be reasonable for us to expect that we could get more volume than that to show up here intraday. NQ now, maybe possibly setting up for that reversal breakout. ES also possibly setting up as that low vol fake out / reversal. We need to close above 92 approximately for that to be the case. So that looks fine. Second biggest volume bar of the day would now have to be the aggressive entry technique here. NQ less appealing because we've got that rejection already at that 2206. So stop loss on ES would have to be 57.92. So starting to set this up here, right? So we're looking for elevator up, right? Stairs down. We haven't quite seen that here yet, but we're risking about 2 points a contract, right? Assuming an entry around 57.94. So that would allow us to buy, 6 contracts, right? Maybe more. Okay, that was a good bounce back. Now we want to see elevator up, right? It's 9:47. We've got data here at 10. So this will have a little bit of a shot clock on it. We'll close this within a minute of market data. Still not quite ready here. So now stop loss would be like 791.50. We might not be getting that correct behavior here yet. Better. So as is, right? If I get an entry under 93, I could be buying 6 contracts and risking less than 500 bucks. So I could go plenty of sizing here without having plenty of risk. But we want to see elevator up here from this point. We haven't really seen that yet. So I'm buying myself time to make this decision. Right? See how it keeps getting stuck at 93 and then selling off point to point? We want to see go from like 93 to 94 to 95, right? Maybe even beyond. And then we can get that pullback. So it keeps getting stuck at that. Again, that was a 1 tick move above 93 and then a 2 tick sell off, right? So it's moving lower faster than it's moving higher. So for now, no reason to jump in this with any aggression. All right, so now I'm going to say trade is invalidated for now. Let's get some more evidence of this thing holding. And just as a rule of thumb, right? My max risk that I'm willing to take on a trade is like $500 to $600. The reason why I'm willing to size my positions to be risking me $500 to $600 is because I know if I lose that amount of capital, I still maintain, right, my mental sharpness. I don't drain my mental capital. So everyone has a number that breaks them, where if you go from making X amount to losing X amount or something along those lines, you no longer think like a rational human being. And so it's your objective as a trader, right, to define what that number is and to size your position so that hitting that number is impossible. If that means you have to trade micros, if that means you have to wait for deeper pullbacks, if that means you have to skip some trades, then you need to be stubborn and selfish with your own trading decisions to make sure that you're not allowing that number to happen. Because once it does, once you lose that mental capital on a trade, once you have that number that breaks you, you no longer think like a rational human being, and you start thinking in dollars and cents or in P&L or in lost time or anything along those lines. And then your next move is irrational. So then you don't accept losers, right? Then you start averaging down. Then you start doing all sorts of bad habits that only destroy your account. So yes, losing sucks. It's never going to feel good. But if you can't lose small, you will never set yourself up to win big. I guarantee that. So you all need to be incredibly selfish with your position sizing and doing what is best for you and your account, because everyone has a different number that breaks them. And you need to be fully accountable to yourself over what that number is. I've said this before, right? But I like that $500 per trade because my max daily loss that I'm willing to accept is 3K, right? 3K per account. So that's a 15K hit. So that means, right, I can have 6 losing trades in a row before I really test my mental capital limits. Now, I also know that if I strike out and go 0 for 3 on a day, probably not going to be feeling great. So if I go 0 for 3 and I'm down half of what my max loss number is, I'm still putting myself in a situation where I can bounce back from that very easily, and I keep my mental capital reserves full. So if you're not thinking about your entry price from that context first, and you're just thinking, okay, how much am I going to make? How much am I going to make? How much am I going to make? Then that's what's going to happen, right? You're going to burn out your mental capital stores, because when you're green and you're making money, it's never going to feel like enough. And when you're red and you're losing money, all you're going to feel is that desperation to get back to green. And once you're in that feeling, or once you're experiencing that emotion, your reactions are no longer rational, they're irrational. And then the pattern of behaviors that cost you money is random and basically based on getting lucky. So I'm unwilling to accept that behavior from any one of you because I know how painful that is, and it's just a form of self-sabotage. So if you can't be disciplined enough to define what your loss is and defining what that number is that breaks you, then you need to have a serious conversation with yourself to make sure that you are deciding to protect your mental capital at all costs, because we can never control the size of our next win. We can only control the size of our next loss. And if we're not going to be taking accountability over the size of our next losing trade, then it doesn't matter how much we win, because we will never feel like it's enough. So there was no reason yesterday, right, for it to have been an account blowing day for anyone, because we lost small when we did, and we won big right on that follow-up trade. But if we lose that mental capital for when we make our decisions, then it really doesn't matter what the market gives us. All we're going to do is lose money. So if we're not obsessing over losing small and taking joy in losing small, then we don't stand a chance. And I need everyone to believe that with all their hearts, right? With every fiber of their being, because that is the reality of the market, right? Does everyone understand that? So when I talk about controlling the variables you can control, that's what I mean, right? You have to be very selfish in your own desires, but also you have to be honest to yourself and understand, hey, these are my limits, right? This is where I'm rational, and this is my starting point that I have to work away from. So we've got a setup here on NQ, right? Increasing outlier volume, breakout through high of day, separation away from the opening range. So we could be in shape here. We've all been there, Chad. We've all been there. It's just if you want to be a profitable trader, you're committing to not going there easily. Right? That's what you're committing to. So now we're looking at ES. Sorry, NQ. Apologies. And see if it can find support here. Can't see it pull back too much more. Good bounce. So now we want to see a breakout above 222150. Ooh, we might be a little bit too close to market data here. I'm going to have 1 minute to hold this trade, right? 1 minute to close it. I don't know if I have enough expectation to get paid out here. So what I can do is see if this thing sets up as a 5-min signal. And then if it does set up as a 5-min signal, we can map it out. Yeah, but it's about knowing better and then also planning and being proactive in your risk management, right? Not being reactive. So if you want to lose well, you want to lose small, you have to make it easy for that to happen for you, right? So you have to fight back against that greed and set that hard stop loss if you can't trust yourself to use mental stop losses. You have to be willing to close your positions, right, before they become massive winners sometimes. And just build up that tolerance, right? Build up that skill level. You don't have to be a perfect trader all in one go. right? Make it easy for yourself to lose in control. And the only way that you can do that as a trader is set your hard stop losses, take the little slap in the face for when they hit, because it's never going to feel good, right? Losing never feels good. But losing $500 versus blowing your account feels a lot better. No, not yet, Damas. We're going to wait for that 10 a.m. data to drop here in 8 seconds. And then we have a 5-min signal here. I'll let you know, right, when it's time. Okay, good bounce back, so we can start to set this thing up here. Stop loss 22.29. So now we want to see elevator up, right? And see that strong reaction defending this area. So far, it's been an elevator up and an elevator down, right? Which is a pretty typical algo reaction. Okay, see how it bounces back from these lower lows. Now we want to see elevator up, right? So stop loss now would be 225.25. And we're looking for elevator up above 234.25. So a 9-point stop loss, right? Means I could buy 2 contracts here. But I have no reason to front run this yet. And for sure, right, if I bought at 215, I'd be nicely green here now, fine. But the reaction to data is random, right? I don't know, even if market data is positive, it might often dump on that, right? If market data is negative, it might pump on that. So I have very little control over that initial reaction. So I'd always rather wait it out and systemize that process. Okay, so we're looking better here now. Going to start looking for a little bit of a pullback. Well, that was a big one. Too big. That went from 220, gosh, god darn. That went from 2240 to 2237 in one go. Right, too much. I got everything set up here. I want to see elevator up above previous high a day, right, which is this area. And then ideally, right, we want to see that area act as support for our thesis. So far, it hasn't. Yeah, I agree. Every now and then, I just give myself tongue twisters. Red leather, yellow leather, red leather, yellow leather. And just as like a rule of thumb, right? What I have found in my own personal trading is that when the market tells me or makes me feel like it's time to enter, it's usually a little bit early, right? So my impulse is always that I'm going to miss this move. I got to jump in. I got to jump in. but it's like the second time or third time where it feels like it's appropriate, that's when it's more time for business. So now stop loss 220, 250. And we have not missed out on anything here yet. And our objective with our entry timing, right, is to be green right away, not to just be in a position. Okay, so did close as a green candle, higher high, higher low. We're not dead here yet, but we still want to see that elevator up above and then tick by tick pullback right into that 34.25. Better, much better. All right, so I'm going to start looking for an entry here on a little tick by tick pullback. All right, and I'm in average price 236.75. Can't see what I'm writing here. And this is 2 contracts. Let's see if it can go here. Come on. Good entry, Mike. Any entry under 241.75 is a good entry. There's that nice pop. So that's plus 500. Let's see if this thing's got juice here. Don't really want to see it make or pull back really under that previous high a day. Right, so this thing's got to go here pretty quick. Otherwise, I'm going to be skeptical of follow through, and I'm going to take my win as is. Still have some more data dropping here at 10:30, so maybe this is the move before the move. So now, right, we want this candle closing above, you know, this 245 area. Yeah, stop loss is this red line here, always. Right, so you can always see my stop loss here. Okay, see if it can really fly through 250. If we can't hold above that yellow line, I will close this. Ideally, we hold above 250. Well, I usually try to do limit orders, but if it doesn't hold this yellow line, I'll just click close all positions and get out with a market order. If I want to be out because I think the position isn't moving in my favor, I want to be out as quickly as I can. Yes, it is. Yeah. So it held just above. So let's see if it's got juice to break out through that 250. One thing that maybe is bothering me here a little bit is I would have wanted to have seen increasing volume post-entry. If I think about my strongest trades, that generally is a common theme you see. Like if I think about the trades where I've given back P&L this week versus the ones where I've had good follow through, my immediate entry candle gave me an increasing volume standard. So not getting that's giving me a little bit of deja vu here. Once I'm up 2R, I will look to protect my position. So if my entry price, right, was 36.75, that means I'm risking approximately 15 points. So once I'm up here now, right, stop loss is going to be at entry. So once I'm up at 66, right, I'll be protecting my entry. Okay, so far so good here, team. So far so good. Let's see if we got some more oomph left in us. Come on, bit more here. There we go. See if we can get this now through this 2260 area. And I'm not convinced this is going to go increasing volume here. Fighting a few demons. Let's see if it can go here aggressively, right? I'm going to keep cranking up the standard that I want to see hold. So next $1.16, I want it to see it close above this candle's high, right? So if I don't have volume supporting my thesis here so far, right, or supporting my entry, I want to see us keep finding previous high of day as support here for a continuation narrative. So that's 253.50, right? It's got to close above that in the next 20 or 40 seconds or so. If it doesn't, I'll take my win and move on and reset. So it's not a bad little win, right? Not a bad one. Maybe won't be a monster. But I'm not going to let this trade cost me money at this point. Right, so our Alamo here is that yellow line. We want to see this candle close above. If it can't, that is not a sign of strength. That's fine, right? That's looking much better. So beautiful, good close. All right, now let's see if this thing can keep pushing here, but turning into a nice day here, team. Yes, correct. So if it couldn't hold above that yellow line on that most recent 10-10 candle, I would have closed that position. Right? So I want to see previous areas of resistance act as support for me to get good continuation higher. Right? Because I don't have volume supporting this thesis here yet, right? So this is making higher highs on decreasing volume, which isn't the best sign of strength. Does that make sense? So now protecting my entry price, right? Like I said, this trade, I'm not letting it go red. And let's even keep making higher highs, right? Towards that 2,300. Rusty, I gotta you start using your advice here. I feel like I get tongue twisted every time I say that price. All right, so far so good here though, team. So far so good. But yeah, we're in great shape here, team. We are in great shape here. So almost $1,000 on the day. Let's see if it's got a bit more legs here. And this has a chance to go increasing volume, which is what we've been waiting for. And then maybe we can look to build up. Stop loss is just above my entry price right now, Emil. So entry price plus the spread. So the spread's about a point. So stop loss is at 238. And that's a hard stop loss, and I might look to close it before that, right? So for whatever reason, right, this candle ends up looking like most bearish, second most bearish, normal body bearish on increasing outlier volume. Then that's also a signal, right, to suggest that, hey, bulls aren't in control here. We made higher highs on decreasing volume, and now I see big bearish volume stepping in and defending. That wouldn't make me feel good about my thesis. So I want to see this candle close as 1, 2, or 3 here on volume. And then I can look to either build into my position or hold this thing out. So right now, I have a stop loss set, hard stop loss set here at this, we'll call it a red line, that is a hard stop loss. If I don't like the reaction inside current price to that red line, I will close that with a mental stop loss. So this is my worst case scenario, right? If it hits this, I'm going to be pissed off, but I'm not going to lose any money. Ideally, right, I can protect myself before that happens if it comes together, but right now, not the case. We're in great shape here. So just make sure this doesn't close like an asshole candle. We'll be all right. It's an okay close. I don't like that it touched 70 and couldn't close above. So I'm not going to look to build into this position here at the moment. Still a little bit apprehensive here. We got 10 minutes till the next bit of data drops. All I did is I modified my original stop loss order to that price. So when I enter trades, I do a technique where the first thing that I tick or the first bit of price action that I fill in is my stop loss. And then I can go modify that if I haven't added any position. No, I'm not going to look to add in any positions at this time, Antonin, because I have a bit of a shot clock on this. Nice work, Jeremy. Hey, 600 bucks is a great day. This I don't like. It's a good bounce, but this I don't like. Lower low, lower high here so far. Nice work, Mike. It's a great win. I'm debating closing this as well. Gonna give it a second. Nice work, Juan. All right, guys. We're going to look to close this here in a sec. It's not a healthy reaction. All right, I got out there at 22.50. Ah, it's annoying. So 560 bucks. All right, Jared, don't complain about that, right? $500 is a good start to the day. Nice work, Rain. It's a great day. So again, right, we saw warning signs here early on this trade, right? Separation away from our entry price on a decreasing volume standard. Doesn't feel good. Well, ES is more range bound because there's a lot higher of a distribution here of oil stocks, right? So if we've got crude oil inventories happening at 10 and crude's pretty much or 10:30, sorry, and crude's pretty much range bound here all morning, I think that's probably the reason. So inside my notes here, if I can find my pen. Right, so in my notes, right, I'm writing down, okay, after entry price, saw consistently decreasing volume and just could not hold psychological levels basically every 10 points higher. So stopped myself out before this thing ran. Right, and that's ran in either direction. We don't know if it's going to give us separation here yet. So now I can update my notes, right? Would have stopped me out had I held. Entry price was 2236.75. Entry price was 2236.75. So one thing that we should be proud of here, right, is that we corrected the mistakes that we made early in the week, right? So early in the week, was pretty happy to ignore maybe some of those red flags, right, for lack of a better term, and allowed decent sized wins turn into small wins or small losses. Today, didn't let that happen, right? Took a 1R win, fine. Wish it was a little bit more, but it wasn't. And that's fine, right? That's all a part of the game. So the note I have here on my piece of paper, which I'll update in my journal at the end of the day, made higher highs on decreasing volume post entry, touched 70, then sold off, so decided to protect the win instead of letting it stop me out at entry. Pending data at 10:30 made me a bit nervous, so took the win and moved on. Would have stopped me out had I held. So, okay, right? I can acknowledge that, hey, didn't behave exactly the way that I wanted. Had some red flags here post-entry that wasn't as strong as it should have been. And okay, saved myself some money, saved myself some headache. And if this thing sets up, we still got plenty of room, right, towards that next target. Or we can look to play CL or ES that still continue to remain range bound and haven't given us that oomph yet. So again, right, talked about this morning about being honest with ourselves and admitting, okay, if price action does this or price action does that, I'm going to be draining my mental capital. Well, here's the reality, right? If I see it touch 70 pull back, stop me out at 29 or 30, and then it's back up above my entry price, my mental capital is going to take a serious hit from that type of reaction, right? It's not going to feel good. You'd feel like shit about seeing that move happen. So do I feel great about a $560 win? No, but it could have been a lot worse. And so instead of, hey, deciding I'm going to get emotional about this or I'm going to do something stupid, I'm going to trust the price action I see in front of me, protect myself from the worst version of myself, and not allow myself to lose money just for the sake of losing money. So good decision here today, right? Feel vindicated in that analysis. And now, right, had I not stopped myself out and now I'm down 10 points, would have been stopped out at my original price, I would have felt like an idiot, right? So again, today I was proactive, not reactive. And that saved me money and actually made me some money. So can keep building on to what has been a nice week here so far without having to drain any mental capital. Does that make sense, team? So did it feel good closing that trade early before it hit our final profit target? No. Was it the right thing to do? Yes. In a month's time, will I forget about, oh, I wish it was a $1,500 day instead of a $500 day? Yes, right? So I'm protecting myself from the worst versions of myself by being proactive, not reactive. And okay, green day is a green day. And very much vindicated in that decision going into data, right? So it was the right move. So a couple things to be proud of, right? One, we identified a mistake that we'd been making early in the week, right? And we addressed that and fixed that issue here today so it didn't happen a third time, right? Two, we made money. That's a good day. So I always say green days turn into green weeks, right? Green weeks turn into green months. Green months turn into FUs to your boss. Making $500 per account. It's a lot better than making $100 per account or losing money on each account. So I made it easy, right, to not only trust myself, but to trade my system and to look at price action for what it was actually giving me. Can I nitpick here and say, okay, I should have closed when it didn't hold above that 70? Maybe. But baby steps, right? Baby steps. 100%, Rusty. We still got plenty of the day left here. It is looking pretty choppy everywhere but NQ. And that NQ trade was not easy. That was, again, I don't want to be too much of an egomaniac here, right? But cutting a winning trade early and fighting back against that greed is one of the hardest things that we can do as traders. Right? So we made money in expert mode here today. Can't complain about that. So now crew dumping on inventories. Huge volume, right? Let's see how that drags things down with it. ES, in theory, this could be tempting, but the juice is not worth the squeeze here, right? So we'd have to be targeting high of day as our target. And okay, you know, it could happen, but just to get the risk reward that we want and all this kind of stuff, not enough space, right? So for myself, I'd like to have previous high of day as my entry, or previous that candle's high, so 237.75. As is, I can't get the risk reward to justify being inside that zone. So I'll have to wait for a different time frame or a different opportunity. No, not really. But if market, like NQ is all tech, right? So like the Chevrons of the world and the BPs and all these big oil companies, they're not listed on NASDAQ. But when markets or volume gets pulled from one, it goes somewhere, right? If something gets sold somewhere, it tends to get sold everywhere. So there's a lot of like various correlations, right, that are just from like a management perspective. So if I'm even thinking about like when I was trading institutionally, if we had like a data news event, right, we'd have ratios inside our portfolio that we want to maintain at all times. So if we were trading or trimming our crude exposure, well, that would then change our ratios, right, that we wanted. And so we'd have to trim our Apple position or our Microsoft position or our general index exposure to maintain those same ratios. So it's not directly correlated, right, because you don't have any oil names on the NASDAQ exchange. But operationally it is. So it's kind of a cop-out answer. So for now, I don't see too much going on here that's very appealing. But I'm happy to be green. Everyone feel good about how we traded here so far today? Does it make sense? I appreciate that, Chad. And then one thing, right, about that pyramid technique. So I talk about, hey, I want to control the size of my max loss, right? I want to control if something goes against me, right? I'm only losing this amount. Well, the point of that as well, right, is that by keeping my sizing small, it's easier for me to look at the chart and not think in dollars and cents, right? So although I call out, okay, here's my P&L, here's my P&L, here's my P&L, because I'm not 20 contracts deep into one account, right? Or max position of 15 contracts per account. I'm not blinded by the number, right? So I'm not thinking, oh my gosh, I'm up 10K, this must be a great trade. I'm still able to view price action relatively rationally and then protect myself, right? Without falling in love with the P&L. So thinking too much about the P&L, thinking too much about the number is a trap. So again, right? I'm being proactive, not reactive there, right? Because I'm protecting myself from trading with blinders, right? So even though today wasn't an incredible trading session here so far, it's a good process day. If I behave like this on a day-to-day basis, I will win. If I make $500 a day on average, well, that's quite a lot of money at the end of the year, right? I got 5 accounts. So, that's an extra 500K. So to think that this isn't a good enough pace to make you money or to create the future that you want, probably means you have a spending problem, right? Or an expectation problem versus a trading problem. So again, right? Proactive, not reactive. Make it easy for yourself to view the information you have in front of you as objectively as possible. Now, the second I take on a position, right, and I'm long, I've got my green tinted glasses on, right? I want to see as much of price action confirm my narrative, but I'm constantly asking myself, what would make me feel wrong? What would make me say that this isn't strong? What would make me feel like I'm going to lose money? And the more and more specific I can be in that analysis intra-trade, the more binary I make those decisions. And the more binary those decisions come, right? Or the more binary that my process is, right? The more that, like, the easier it is for me to basically not fall in love with my P&L. I can think as a process-based trader. I can think systematically. Right? So if it's based on, okay, it needs to hold this price, needs to hold this price, need to see increasing volume, needs to hold this price, then either it holds that, or we get that increasing volume, or we don't. And then from there, right, the fork in the road decision is easy. So the counter or the workaround to being a greedy trader or to being P&L obsessed is to be more specific and deliberate in your actions so that you're not judging yourself based on your number. You're judging yourself based on your analysis. Interesting bounce from crude. Gone one way, gone the other. Maybe on this 15 it could set up for us. Everything else looks pretty lackluster though. I'll be right back here, team. One sec. No, Ben, I don't. Pretty much all I trade here, right, is ES, NQ, and CL. I pretty much don't look at anything else. Not that you can't trade them, but I've said this before about other tickers and other opportunities, other names. It takes a lot of work to backtest something, right? And for me to put in that work, um, and at the moment, it sounds a little bit egotistical, but I don't feel like I need more action or more opportunities. I feel like I get plenty of upside. I'm happy with my edge in futures, NQ futures, and ES futures. That I don't feel like I need something else. So, not that you can't, not that you shouldn't, not that it wouldn't be able to make you money. But it's hard for me to justify putting in the work when I don't feel like it necessarily adds more value to my trading at the moment. I have my own personal beliefs about crypto and stuff like that. It's probably influenced that a little bit as well. But yeah, it just, it takes a week, right, for me to backtest something properly the way that I want. It's hard to find a week where I can not only be motivated to do that, right, but be able to do that distraction free. Um, what do you mean by that, Chad? So like when I'm doing my intraday analysis? Yeah, broke high a day, couldn't hold high a day here. So intraday, honestly less sexy than you think. I basically just look at like the first 3 or 4 candles to my left on the daily time frame and what their high is, and then just round it to the nearest round number. If it was a swing, I'd probably just look at like weekly highs and lows. Right, as my general target. If it was a monthly swing, I'd look at monthly highs and lows. No, not really. I kind of view myself as a pure day trader. Now, it's not to say I won't, but it's pretty rare that I do. What I find with myself, just from like a personality perspective, is that when I'm looking for swing trades and I'm in a swing trade, I tend to get like a little bit of tunnel vision, where all I do is watch price action all day long, and then I get burnt out. So I find it to be less appealing within that context. What I like about intraday trading is that I always start the day off 0-0. And so the ex-goalkeeper in me loves that. I don't like waking up very much having too much of a big win behind me or too much of a big loss. So I like the intraday stuff more. It's not to say that I won't, but it'll be like maybe 2 or 3 trades a year where I'll do it. Like most recently, I swung trade Apple from like the 160s to the 230s. And that was a great trade, and okay, it was awesome. But again, it's rare for me to want to do that. It has to be so obvious and such good value that I'm willing to do it. And basically, I need to be willing to have a 10-year hold time on it, right? If I'm willing to take it. Like my personal long-term portfolio is just basically dollar cost averaging into ES or SPY and QQQ. Possible reversal setup there on ES. So I'm going to be watching ES here, team. Absolutely watching ES here. 3-min reversal. Stop loss 57.88.75. So looking for an elevator up, stairs down. So far a little bit choppy and bouncy at this area. That was a very aggressive rejection lower. So now stop needs to be a little bit lower. It has to be 88.25. And then you're looking for an entry elevator up above 90.75 and then a pullback into that zone. So this could be a 4 contract position. Good elevator. So let this candle close. Let's see if we can get a pullback then after this candle closes. 1 second here. Setting up nicely. When I say elevator, I mean price goes higher faster and it pulls back slowly, right? So stairs are a lot of work. Elevator is quick. So if bulls are strong, right, they should defend that price action with aggression and that move away should be fast. When it pulls back, it should be slow. Correct. They reflect the how fast price is moving. You can also do this. Stop loss 90.25. Okay, so we're gonna start looking for an entry here. Okay, too much. Not yet. So looks like we might have survived that worst case scenario, right? So we want to see now elevator defend this low and really push us higher. Okay, did not defend it well enough. So no entry here, no entry. Maybe on the 15 min. But it's got some work to do to go increasing volume. So I'm not sure if I'm going to be willing to take another trade here. Just kind of looks like range-bound PA at the moment. So not enough volume there, right? To suggest I should be aggressive. Sounds good to me. I'll have a great day, man. I don't think I'm going to place another trade here, team. Sounds good, Mike. Enjoy your day, man. So yeah, team, I'm not going to place any further trades here. Going to take the day for what it is. Ooh, I got to update this with some of these videos. I'm not sure here yet, Jeff. I'm not sure. Could be, we're going to be going to Q4 here pretty soon, right? So the Q3 trade might be ending. Q4, things get pick up a little bit. You also have the election volatility that could be shaping up. People are going to be positioning themselves for that. So there's a million different answers. Sounds good, Bergs. Have yourself a great day, man. You have a good day, D-Wayne. Think about that fork in the road, man. What are you going to do next time, right? How are you going to make it easy for yourself to avoid going on tilt? That has to be the emphasis, man. There's no reason for your day to have occurred yesterday. Yesterday should have been a great day. Yeah, we can do some questions here if you guys want. Yeah, absolutely. Happy to fire away. Ah, lucky Rain. Enjoy, man. Play well. So yeah, green every day here so far this week. Will not complain about that. But yeah, happy to answer some questions if you guys have any. We'll do office hours like Michael's asking. Um, essentially, I'm assuming you mean their evaluation accounts. I don't think there's like a different version than that. So yeah, I have 5 Top Step X accounts at the moment. And yeah, use those to trade on top of my personal funds. Sounds good, Emmanuel. Have a great day, man. Yeah, I would say, Chad, I normally look at setups on the 3, 5, 10, and 15. Whichever one gives me a scenario that matches my daily plan first. So I'm looking for the first time frame that gives me a setup that matches my daily thesis. And there's no like preference to time frame. And then once I'm on a time frame, I don't look at other ones for like signal confirmation or rejections or whatever. I just do all my analysis on that one. Yeah, correct. Yeah. I'm not sure what you mean by group orders and simple orders. That's not language that I'm familiar with. Maybe you mean like copy trading. So what I do is I copy across 5 accounts. So if I place an order in one account, it gets copied across 5. Maybe that's what you mean. Sounds good, Chad. You have a great day, man. Ah, I see what you mean. Okay. So, yeah, what I say when I trade, I always trade with a stop loss attached to my original entry price. So that would be in that context a group order. But I never have a take profit set with that. Yeah, Brian. So it for sure can. It would be the last 90 minutes where you'd like to see the opportunities show up. Just for myself personally, I find that two reasons. I used to stream from 9 to 4, and I would just get really burnt out, and then my performance would start to slip and kind of deteriorate. So that's why I don't do it anymore. But yeah, I can see no reason why it wouldn't be just as successful in power hour, right? Or last 90 minutes of the day. This lunchtime period, right, between like 11 to 2:30, right, give or take, not very impressive. Bunch of statistics out there about, you know, how often like a low of day or a high of day is made, and the most often it occurs inside the first 90 minutes. The second most often time is in the last 90 minutes. Excuse me. I'm personally not going to be looking to place any further trades here today, Dimas. I'm pretty happy with how the day went. It's a relatively slow and choppy market, so I don't see much enthusiasm here or really any reasons for me to place any further trades. We had a couple opportunities and a couple signals, so I was like looking at ES on this possible 15-min reversal, but it didn't give me that volume. Yeah, for sure, Brian, for sure. Generally, I don't look to place new trades after 11. I'll look to manage my current position if I'm in one, like yesterday. But, yeah, historically, I don't look for new moves at this time. Just like that statistic I just mentioned, right? So, new high of day or new low of day is like 63 or 64% of the time made in the first 90 minutes. And then the second most likely time it happens is in the last 90 minutes. So you tend to just get a chop here, kind of post that morning rush. So it's not to say that moves can't happen, but I just historically have less of an edge if I'm trading momentum. In the afternoon, Brian, though, right, like last 90 minutes of the day, you'll get very similar volume to what you see in the open. Right, so not great examples here Monday, Tuesday, but Monday, Tuesday, right, really pathetic volume. Here at 2 p.m., right, you get back above that outlier, similar to like that 10 o'clock volume time. Right, so it tends to show up right around that time period, and then you get, you know, chaos. Right, so you do get those volume standards, right, to show up a little bit later on. Anything else here, team? Any other questions? It happens, Brian, right? I wouldn't put too much pressure on yourself there or worry about that too much. Like, the variance is random of when we get trades, right? So there's going to be times where you miss them. There's going to be times where you get them. Just try not to make it feel personal, because I promise you it's not. I can't answer that question, Craig. I'm not sure. I had no control over that. That'd be one for their support team. Those of you who are still watching, who are DTR guests, how have you found your experience here so far? Yeah, same here, Brian. Like, the reason why I switched to Top Step X is essentially for just like execution reasons, right? I find it much simpler just to have it all set up that way, and just don't have to deal with those headaches. Love to hear that, team. Love to hear that. Yeah, the intraday drawdown sucks. The high watermark drawdown sucks. Especially on the smaller accounts. Hey, that's not bad. I mean, I got out for like 554. So, no complaints. $400 per account's a great day. So, it'll keep stacking up. Not every day, excuse me, not every day is going to be a monster, but a consistent, repeatable process is what gets you more monsters. And we certainly did not miss the move, right? So, you know, after we closed our position, it's just been red, red, red. And yeah, guys, everything we do here is built out from a risk management perspective first. So I'm sure I'm sounding like a broken record here, but I can't control the size of my next win. I can only control the size of my next loss, right? So if I obsess over losing small and controlling those variables, then winning just kind of happens, right? And the more obsessive I can be over those little details, the easier it is to be obsessive over protecting wins and protecting profit and making sure I'm not giving things back. And that's something I've had to work on a little bit here this week, right? Finding that balance. Didn't find that balance super well on Monday and on that first trade yesterday, but then found it well today and found an excellent balance on that trade yesterday. I run the 150Ks, Craig, the largest ones. What do you mean, Clark? Five, Craig, five. Any other questions here, guys? Anything that's crossing your mind? Happy to answer it here. Anything at all. Nothing's off limit. You can't post links in the chat, Clark. It's to prevent like porn bots and stuff. If you want to post it in the Discord, I can make a comment on it then. Oh, yeah, classic, classic. It's not insider trading if you're a member of Congress. Probably the second most successful trading group you could join, besides DTR, would be if Pelosi ever started one. She's a killer. No way. That's greasy. Oh no. Yeah, you too, Clark. Have a great day, man. Yeah, you have a great day too, Lift. Sounds good, Jeff. We'll see you tomorrow. Guys, do you guys have any questions, any comments, any feedback? Yeah, if you want to do that, Dumas, please contact your rep, and they'll make sure you're sorted out so you can join. Any other questions here, team? Any other questions? Yeah, correct. No other action here for me today. Sounds good, man. Looking forward to having you part of the team. Anything else? Anything that's on top of mind? Anything you want to hear about my trading? Anything I've done? Why I take some trades? Why I don't? Happy to break that down here now. But if no further questions, I'll look to kill the stream here in a minute. So final call for questions here. Final call for questions. Anything and everything is fair game. All right, final call. Final call. All right, team. Well, If no further questions, then same deal like always. If something comes up or something sticks out, send me a message, either Discord or send me an email, michael@dtrtrading.com, and I'll do my best to get back to you as soon as I can. In the meantime, have yourselves all a fantastic rest of the afternoon, and hopefully we can get ourselves back rocking and rolling here like we have so far this week tomorrow, and finish off the week with a bang. But it's been a great week here, team. Been thrilled to be able to share this experience with you all, and hopefully we can keep kind of compounding on the skills, knowledge, and P&L that we've been making here so far. So have yourselves a great one, and we'll catch up soon. Peace.